All right, welcome everyone. Thanks for joining us today. You're welcome to the latest Together for Business activity and program of events. Sadly, we're a wee bit down on numbers today, so we're going to sort of take a slightly shortened approach to this and take some Q&As at the end. And unfortunately, Alison wasn't able to make it today, but we are looking at things. I think a bit of the feedback and sort of consultations that we've had recently is that people are starting to go back to work. The school runs have started again, and there's a level of normality. And I was just in a meeting, and I think 7 or 8 people were on holiday this week as well. So we're actually going to, just to bear in mind in the future, we're probably going to try and go to maybe sort of lunch and learn events to replace these, where we maybe have a really sort of focused half hour for the session, and people can dip in, have a sandwich while they're picking up these sort of golden nuggets of information. So just so you know, keep a lookout for that in the future, just to try and kind of adapt to the changing situation. But this, I'm absolutely sure we'll get Alison back and Iain back for one of those, because this is a really important issue for businesses and will become extremely kind of crucial as you know, grants run out, as businesses have a look at some cash flow issues. I think if we look back to, I don't know if you're going to touch on this, Iain, but if we look back to 2008, it almost overnight went to kind of 3 months in terms of invoice payments, and that was sort of average, I would say. So yeah, so I guess on that note, I'll pass over to Iain just to sort of give us an overview, and we can have a wee sort of question and answer session at the end. And I know that Jeannie had posted a question, so we'll pick that up as well once Iain's presented. So just bear with us. I'm going to pass over to Iain and get him to share his screen for us. Okay, so if you want to unmute yourself, Iain, and then share your screen.
Okay, you see that?
Yeah, if you just want to play that, that'd be great. Full screen.
Okay. So first and foremost, thanks everybody for having me this afternoon. My business is Hewitt McLeod, and Damon asked me along today partly to talk about debt recovery and what that would mean for your business if you had to engage a debt recovery company. What I'd like to say, first of all, that sometimes there's a perception of what a debt recovery company means and what it does. And I'd just like to put out there, first and foremost, it does not mean 2 guys turning up at your customer's door with a baseball bat and 2 Rottweilers. That is not what we do, and that's not the image that we and all your business would want either. Okay. It also doesn't mean it's the end of your relationship with your customer either. You know, you should be able to engage with your customer to get you paid, and then that relationship should be able to continue after we have been involved. So if I can just move on to the next slide.
Sorry, can I just jump in here? Could
Yep.
you just press play at the top, just so we've got the full screen
Okay.
from your presentation, please?
Okay. Let's see if I can do that. Bear with me. Not you?
Perfect, thank you.
Okay. Okay. So let's say, how can it work for you? So using a debt recovery company, there's a couple of points that you'll see the benefit of. The first thing is you will have an effective escalation process. Now, what that means is you will have already went through some sort of letter, maybe telephone calls to your customer asking to get paid, and you'll come to the end of that process. Now, you've got a choice. You can either go back to what you've already been doing, which hasn't worked, obviously, or you need something, you need another string to your bow, another tool in your toolbox. And that's where we come in. We offer that escalation process. It's sort of a good cop, bad cop relationship. Okay, so when you escalate it to yourselves, you're sending a message out to your customer. You're telling them that you're taking your payment terms seriously, and you're now, you've escalated it. You're looking for action to be taken, and that's where we become involved. Okay, by doing that, you'll get your invoices paid quicker. Okay, you're sending a message out to your customer that you're serious, that the matter is now out with your control, and it's been passed on to a third party, and we will get that paid for you. Now, getting invoices paid quicker will also improve your cash flow, because at the end of the day, cash is the lifeblood of a business, and the quicker that comes in to your business, the healthier cash flow becomes, takes away the stresses of managing that cash flow. It also gives you time back as well. Time that you've spent chasing that customer for payment, time making phone calls, sending emails, and it's taking you away from other projects in the business, from growing the business, maybe from developing your staff, or promoting the business in other ways. It also keeps the customer relationships positive as well, because running your own business especially, it can be awkward to have that conversation to ask for payment. You're trying to sell your product, provide your service, promote the business, but then on the other hand, have that serious conversation about, you owe me money, when are you going to pay me? And it can be awkward. The messages can get confused. The messages that you're leaving for your customer can seem very apologetic rather than, formal, straight to the point. I've provided you a good customer service. I've provided you a good product. Can you please pay me? The other thing it does is give you credibility. It gives you credibility, from your customer's point of view, that they know that you have a process in place, that you're serious about your business, you're serious about your products, and you're serious about getting paid for it. Also tells you, your suppliers as well, that you'll pay them in time. You're getting your money in quicker, your cash flow, you can pay them in time. And also to potential lenders as well. If you're looking to maybe, get a loan or take advantage of invoice factoring and things like that, if they're looking at your business and you don't have a credit control process in place, and you have money outstanding in your age debt listing, they're not going to be willing to lend you money. And first and lastly, having a trusted and effective partner means that you can call on them as and when required. For an example, we have clients who use us as part of their collection process, where they're passing us accounts every 60 days. We have clients who use us once in a year, or just as and whenever they need us. So it's somebody that you have got behind you, got your back, so to speak. Okay, so how do we go about getting the payment? What do we do different from you? The first thing that we will do is validate the data. No, we have to know your customer, just like you should know your customer. But you'd be surprised the number of cases that we get passed. And when we go to validate the information, the company's actually dissolved. They're no longer in operation. Or the telephone number's incorrect, that's why you've had no contact. Or it's an invalid email address. So we have to validate that before we even start the collection process. Next thing also we're going to do is make contact. Now, we want to make contact with the decision maker who makes the payments. There is no point in me speaking to the same person that somebody maybe in your accounts department has spoke to, because that obviously has not worked. We may say to them, you owe money, you haven't paid it, you've been speaking to Damon, he's called you a number of times, but with all due respect, we're still waiting on money, so who can we escalate this to? So we want to speak to the business partner, or sorry, the business owner. And the fact that a third party has got involved as well is sending a message to them. All of a sudden, they're not dealing with yourselves, they're dealing with a different party. They realise that you have escalated the matter. The matter is now serious. Effective communication is key to all this. And it's a lot of instances when we get past an outstanding invoice, the reason we get past it is because we've had no response to it. Nobody's come back to us. We don't know what's happening. We've not had a response to our email. We've not had a response to telephone calls. And this is a major difference between, I would say, a third party getting involved and perhaps yourself. Asking for payment is about having a discussion. It's about physically having that conversation and asking it. It's not about sending an email and waiting for a response, sending a letter and waiting for a response. When it gets to this stage, you need to speak to the decision maker, and that's what it's all about. You need to convey to them how the seriousness of the situation and what the impact of not paying is having. Now, secure payment, that's our be all and end all. That is our priority number one, is to secure payment as quickly as possible. Normally that will be done by getting them to pay it directly to your client. You've waited long enough to get paid. So the last thing you want is money coming to the third party and having to go through their process before they send it to you. So we'd always encourage our customers to pay our client directly. Sometimes the only time we would maybe make that different is if we have to maybe manage installment plan. You know, we have to take payment maybe over 2 or 3 payments. It's better that we control that. We can then be on top of the date that the payment's due in, and if it's not in, we can contact them right away. Because if we pass it back to maybe our client to manage the payment plan, there's a danger that again the payment plan then falls behind and we're basically back to square one. Negotiation and overcoming objections are key to all of this. The negotiation side is very important because we have to be aware of the terms and conditions of our clients, because that's the reason and that you're enforcing that. That's what you're trying to implement, is the terms and conditions of your contract. And again, you need to know them. We get past accounts where clients have got invoices overdue, and we will maybe say to them, look, do you want us to enforce the late payment interest or recover charges for you? And they will ask us, oh, can you do that? And we have to say to them, well, that's on your terms and conditions. You should know that. So it's very, very important that if you've got points on your terms and conditions, that you're using them to your best advantage. If you're saying in your terms and conditions that if you're going to pay late, that you can charge them interest, you should be doing it. It shouldn't just be on there just for the sake of it. And the same if you're going to escalate the matter to a third party. If you're going to get charged for that, it's only right that your customer should compensate you for that. Overcoming objections, again, a lot of the times maybe a reason for non-payment is because there's been some dispute in the past. And it's very important that we're aware of what those previous disputes have been, because it makes us, sort of forearmed is forewarned. So if we know about what the situation has been and you've told us that the objection has been satisfied and they've had a credit note, or the objection wasn't valid, we can then reiterate that back to the customer, and we can stand our ground on your behalf and say, look, this has to be paid now. Okay. So just to sort of summarize here, and Damon touched on this earlier here as well, late payment is not something new. We had a financial crisis a number of years ago, and it took 3, 4, 5 months for it all to kick in, payment terms. But there's actually an interesting fact just now as well, that 5 years ago, this was a major problem, SMEs getting paid on time. 5 years later on, the situation has not improved one iota. We're still having the same conversations. Businesses are still having the same problems. And it's not solely just in Dunbartonshire, it's the whole of Glasgow, Scotland, the UK that are having this problem. In fact, it's actually worldwide, and we actually collect for clients in Spain, France, Portugal, etc. And it's across all sectors, fashion, communication, hospitality, recruitment. Again, it's across all sectors. And the common theme amongst all of this, and if Alison had been here, we may have touched on some of this, is knowing your customer. You can try and stop this. You can try and do things in your own business to try and prevent it, to try and identify the late payment earlier. And by that I mean is knowing your customer and getting the invoicing and the billing correct first time. As soon as you've produced your product or offered your service, get that invoice out right away. Make sure it's correct. And that way that you're stopping any delay in getting the payments to you. And be proactive in collecting as well. I mean, we've talked about this sort of 80-20 rule, where maybe 20% of your customers account for 80% of the revenue. Those 20% of the customers, these calls should be easy. It should be like a customer service call. Were you happy with the product? Were you happy with the service? Did you receive my invoice? Are you happy with the invoice? That's great. So can I expect payment on that date? Yes, you can. Thanks very much. And that's you. You've done a collections call. That is a collections call. And if you do that for the top 20% of your customers that produce the bulk of your revenue, the minority, we can take care of the minority, okay? But you also have to have a clear escalation process in place as well, because people sometimes will not pay. Despite the letters, despite the effective telephone calls, you will get late payers, and you have to have something in place that you're going to do something different, and that's where we can come in place. So my final thought would be, if you're not serious about your payment terms, then how can you expect your customer to be? Okay. Finally, this is my contact details. My LinkedIn details are there, contact numbers, email, and web address. So again, thank you very much for your time, and I hope some of what I've said has been of use to yourselves. Thank you.
That's great, Iain. Thanks for a quick whistle-stop tour there. So no, that's really good. I think Alison's going to share her details with us, so we can send that out to you guys, so you can have a look at her, click through her presentation as well. Before I've got a question of my own, but before I'll let Jeannie ask her question, which was sent through to us beforehand. I don't know, if you want to unmute yourself, Jeannie, you can ask that directly to Iain, see if he can answer it.
Okay, hi there. It was just really, in this sort of current climate, can we go ahead and threaten court action? I know certainly pre-COVID that was okay, and we would, if we were having difficulty getting monies in, and it sort of escalated to the point of a 7-day letter, we would send that. But then I'd sort of heard that actually, and I don't know if this is right or wrong, but in the current climate, sort of, continue to try and get money from your clients, and obviously it's a hard time for everyone, so therefore it would be bad press to go ahead and say, right, we're going to sue you in the midst of all this. But now that we're kind of coming out of a wee bit, or going back to a wee bit of normality, can I send a letter to someone saying, if you haven't paid by the end of this week, I'm really sorry, but we would have to look at raising a court action on this? Or is it still considered bad press in the current climate?
No, you can send that letter, and the court system is getting back up and running again. Okay, so talking to some of my partners who are in the lawyers, there is a bit of a backlog, but they are getting them. But you're quite within your right to send that letter. Okay, and depending on the age of the invoice as well. I don't know how old the invoice is.
Well, this invoice is a February invoice, and then obviously we went into lockdown in March, and what happened was other parts of it got paid, and there's still a part still to be paid, but it was divided into 3 different companies. So the company who haven't paid had said in March, once funds are available, so obviously that company's possibly not doing too well, and therefore isn't being able to make a payment. And my first thought was, well, we could ask for instalments so we could get the money and then keep a sort of tally on whether that comes in or not. But people are keen to push for court action just because they now think they're at it, as opposed to you know, there's a lot of people that could be using the excuse, well, COVID's hit and we don't know where we're at.
Yeah, and that's why it was key during COVID to still be asking for payment. You know,
Mm-hmm.
a lot of our clients were still asking for payment and managing payment plans through the COVID period. So we're 6 months into that. And if you had somebody on a 6 month payment plan, for example, it would be paid by now. You know, so we've delayed it at 6 months. So, you know, I would certainly not discourage you from going down the legal route, okay? But again, all I would say is, you know, going down the legal route, and the same with even ourselves, there's never any guarantee you're going to get payment at the end of it. You might, the only guarantee you'll have is you'll have a decree, you know, whether there's any assets there or whether there's any funds there to actually get paid, you know. So, you know, again, there's nothing to stop you doing it. If it's 6 months old, you know, yeah, certainly do it. Again, that's something, again, you know, we can do as well. We can be a step, you know, before legal. You know, we work on, for instance, I don't know if I mentioned it, we work on a no collection, no fee basis, which a lot of debt recovery companies do. So if it's not collectible, you know, you've not, you know, been charged anything. There's no additional cost. You know, where you could down the legal route, charged by the hour, get a decree, but still not have any money at the end of it. You know, so it's, if you know your customer well enough, you'll know if it's worth pursuing, and any lawyer should be able to tell you whether it's you know, economical for them to pursue it as well. Okay,
no, that's great. Thank you.
It's a useful point there as well, Iain, about I guess if you know you look at the escalation of sort of chasing you know, outstanding invoices, and you know the more, you know, I would say the responses are when, you know, if you haven't had any joy is when they start to get a bit more scary. And I also think if there is a third party involved, it gives you that extra credibility, because the businesses can think, you know, this business is serious about this, because they don't know there's no fee, no sort of win sort of situation. They may think that's being invested in, so these guys are after that, you know, they're really serious about getting hold of their money.
Yeah, and it's a wee bit of sort of what I said right at the very start. People have a perception of what debt recovery is. You know what I mean? You know, and I suppose to an extent, you know, a lot of customers still think it is, as I alluded to. You know, two guys turning up at chapping the door asking for payment. You know, and that is certainly not what a lot of debt recovery companies are about, and certainly not what we're about. I think the most important thing is you have got an extra string to your bow all of a sudden. You know, you have got an extra piece of equipment in your toolkit in the collection process that you can call on. You know, and it just distance you then, you know, from that situation, especially if you're wanting to keep that relationship long term, because, you know, we have come through a difficult time and we are going through a difficult time still. And you've got this dilemma. Is it just, you know, as Jeannie has said there, you know, the sort of image of, is it okay to ask just now to get paid, you know, given what we're going through? If you don't want to ask, we'll ask, you know, and that maybe just keeps you, you know, saves your face from getting involved in that situation.
Yeah, that's good. I've got, before I forget, I'm going to ask one as well, because I think this was one of the areas that we'll send out, but that Alison was going to talk about, and I guess this is quite, and you'd mentioned, Iain, as well, this is very much your approach as well, you know, knowing your customer, but I think maybe if you said a little bit about kind of, you know, developing that culture, and I guess it's you know, Alison had very much mentioned terms and conditions, and even before that, if you've got new customers, the checks that you can do to make sure you're not sort of engaging with someone who's maybe not got a good background in so.
Yeah, I mean, knowing your customer is key. That's where it all begins, you know. And there's certain tools out there that you can actually, you know, do a credit check if required as well. Company's House as well. You can actually go on there. If you're a limited company, you could go on there and actually check that yourself for free, you know, and you'll be able to have a look and see the number of directors have maybe been in the past, or how long they've been in business, when did they last submit accounts, and that type of thing. And it'll give you a feel, you know, for the, you know, what that company is like, and how they have traded in the past. The terms and conditions, you know, what I would say about terms and conditions, even when you're offering your product and discussing the product and making a proposal, your customers should be well aware of what your terms and conditions are long before you even produce an invoice, because you should have been talking about that, you know, when you first had your introduction, when you made your proposal, when you provided the goods and service. So by the time you actually produce the invoice, they should have had maybe, you know, been made aware 4 or 5 times of what your payment terms are. So it should come as no surprise when you actually get paid on a certain date, you know. So again, you know, if you, and Alison would have touched on this, terms and conditions at the start is so important, and so is the invoicing as well. As soon as you've provided that service, they've got your product, get that invoice out ASAP, you know what I mean, and make sure it's correct. You know, make sure it's the right business name that you're invoicing. It's the right address that you're sending the invoice to, because sometimes the billing address can actually be different from the delivery address, you know, where you actually provided the service. You know, so you could send it to the same place, you know, that invoice might never be received by their accounts payable department, and that just causes delay again.
Right, that's good. Yep, the only other thing I was going to sort of pick up on was just to highlight the, yeah, and actually I'll bring you in, Anne, at this stage.
Unmute. Yeah, I just wanted to ask, so I'm an independent HR consultant, and I do have an account set up within Bark. So Bark's an app that people can use when they're looking for an independent contractor, or, you know, to put out an ad saying what it is that they want, and then I get leads from that site. And I've been a bit, I've sort of set up an account and I've put some money in, and I've been a bit reluctant to use it because I'm worried about, you know, if I do a big piece of work, what's the chances that I'll get paid for it or not get paid for it. So it's kind of made me a bit wary. And I suppose maybe there's some other people here today that maybe have used Bark, and I'm just wondering, you know, if you've got any, you know, you have already given me some tips on how I can check the company on Companies House and protect myself a wee bit. So I'm just wondering.
Yeah, I mean, what I would maybe suggest sometimes is, why don't you ask for 50% up front then? I mean, you know, can you get paid a percentage in advance?
Yeah, yeah.
And that shows,
okay.
you know, that again would show commitment, you know, and it gives you a better sense of, you know, a better security in who you're dealing with. You know?
Yeah, yeah, thanks.
That's great. So no, thanks.
I just say that would be the same from the client's point of view as well. They've been asked to find somebody on. They found somebody on the site, and they've been asked to pay money up front. I think that's possibly unlikely, unless you have some sort of secure, you know, even a PayPal account, I suppose, something that verifies you as a client. Sorry, as a contract.
Mm-hmm. Yeah.
No, absolutely. I was going to say, obviously we're touching on some of the ways of, again, terms and conditions, and I guess the how useful are late payment terms in terms of building that in, Iain, because I found those to be quite compelling in the past, thinking that as the longer you leave it, the more your bill goes up.
Well, the thing about it's a useful tool. I mean, I say a lot of our clients sometimes have it in their terms and conditions, but don't actually use it. You know, so what we tend to find, and we will always try and recover the late payment interest and, you know, any charges as well. What you'll find sometimes is it acts as a good stick sometimes, because what you'll tend to find is somebody maybe come back very quickly and say, well, I'll pay you what I'm owed, but I'll not pay you the interest, you know. So, you know, nobody would, I mean, we wouldn't pursue the interest on its own. Okay, so again, if you get what your original invoices was outstanding, most of our clients are happy to get what they were owed. I'll be honest with you, but I'd say probably about 30% do pay the interest as well, which, you know, again, why not? I mean, that's what it's on your terms and conditions for. So you know, it's a good, you know, somebody owes you £500 and you're sending out a letter for £550 and going, wait a minute, only owed 500, well, you £50 interest. You know, I mean, the first reaction is, well, I'll pay you the 500. Fair enough. Most clients are happy with that, you know, but I would say about 30–40% do pay the interest. So that's a good tool to use. And I think if you can get into the habit of, and again, it's reiterating on your terms and conditions to your customers what's there, that if you don't pay it in time, we will charge you, you know, and you're educating them as well. So.
Great. No, I thought that was a good one, and I guess the useful thing about that is, like I said, it may give you the negotiation sort of tool to help you get that payment through. So no, there's some really valuable insights there. So any other questions or comments before we finish up? So okay. So again, we'll try and reconvene one of these with Alison. So look out for that. But for those of you working with clients, particularly, I know you do, Shiona, for instance, and you know, it's really important to reiterate how important this all is, and you know, as a bit of added value for your service to say, you know, get this right in there from the beginning, and you can maybe avoid it happening. If you can't, you know, there are valuable businesses like Iain's out there that can help you deal with it smoothly and professionally. I think to help.
Yeah, and I think that's key. I mean, we're not all just about the collecting; it's about the prevention as well. You know, so we work with our clients on the whole process as well. So, you know, we're the final stage in their escalation, but we feed back into, look, this is what you could have done to prevent this. You know, whether it be the getting the invoicing right, getting the terms and conditions right. You know, so in the long term, you know, it becomes easier.
Fantastic. So no, that's really useful. I mean, I guess the only thing we did think about sort of having someone from invoice financing. So for some businesses, particularly if they're in cash flow issues, I would say is one of the key times that you get into that. I think a lot of Alison had said that you don't really get, you know, push clients to that. But I think there is maybe a space for that, Iain. I don't know what your thoughts are.
Yeah,
on
there
that.
there is definitely a space for it, you know. But I think what you'll find is that before, you know, MD's going to accept you for invoice financing, you have to have a collection process in place. They have to have confidence that, you know, you have got a process in place to collect you know, your invoices. They're not going to lend on, you know, invoices that you're not going to collect on, you know, so they have to have confidence that you've got a process in place and an escalation process in place.
Right. So everything that you've said is still valid, even if a business was to move towards invoice financing, because they're, like I said, maybe sometimes it's a cash flow issue that they're starting to hit. So again, I guess the best practice that we've gone over is, you know, the key thing to consider. So no, thanks everyone for coming along. See you again soon, and I hope you've found a bit of value for that, and maybe it's a good sort of a good insight into a wee sort of quick fix that we can get in terms of some of our experts. So thanks again to Iain for bringing his expertise to bear, and thank you everyone for coming, and hope to see you soon. Thanks.